We are ready to rock, ready to roll. There's Stefan coming in, 25 people. I think we're just about full. Great. All right. So here we are. We're going to introduce each other, but we wanted to just tell you right up front, we've got our new name all set, CLLJ, Crown Capital, and we are doing an investment opportunity in Esquimalt BC. And one of the first people I told was Mayor Barb Desjardins, and she said, Liza, we're so excited you guys are finally doing something in Esquimalt. So we're really excited that this is going to be where we get to go and have some fun. Lots of reasons why we've chosen Esquimalt, and we'll get into those shortly. And let me just go to my next slide here. So here we are. You're see a couple of photos of us. We were commenting about me being a blonde now. There's Joan and I in looking at mobile home parks in Michigan, and Sherry and Rick at one of their apartment buildings. And there's some exciting news coming up about that. And of course, just a couple pictures there, and Sherry's properties in Langford. So we are 4 women who have decided that we want our friends and our families, and we're committed to creating community-minded developments for owners, tenants, and investors. We want to create the wins for everybody, and we want to involve as many people as we can. So we've invited lots of friends and family here tonight. And everybody who's pretty much on this call knows someone either closely or in a business relationship. And so yeah, so we're pretty excited about it, and we'll keep on moving here. So let's go to the next one. So Lori, over to you. Do you want to tell us a little bit about yourself?
I just want to interject just for a moment, because Susan says that she's not seeing the slideshow. Is that still true?
Let's see.
I'm good. Okay, she's got it now.
Oh, she's good. Okay, excellent. That's wonderful. All right, Lori, go ahead.
Hey, hi, everybody. Good evening. Thanks for joining us tonight. Yes, my name is Lori Finnegan. I have been a real estate investor for about 10, 12 years now. Myself and my husband, we own a small portfolio of buy and hold properties. We own land in Metchosin here on the island. We got involved in a project about 2 years ago. We bought a single family dwelling, and we partnered with a builder and converted our home into a duplex, a stratified duplex. So that was quite exciting for us to venture into. I've been a member of WREN, the Real Estate Investment Network. I was a member of them for about 5 years. I'm also a member of the Fortune Builders. So I've done a lot of real estate education over the years. I've been looking for that next project for a while now, and the stars kind of aligned when we came across this property in Esquimalt. All the fundamentals are very strong. This team that I'm working with are very, very, very knowledgeable, lots of expertise that they're bringing to the table. So we collectively have all different sort of qualities and expertise that we can feed off of, and we've all been investing in real estate and very passionate about it. I originally am from the mainland, and I live over in Victoria now with my husband and I, and we've been currently, we live about 5 minutes from where this project is right now, which is very exciting. So I'm very excited. Again, I'm grateful and excited to be partnering with these ladies. Lots of knowledge and expertise. So what I will do now is pass it over to Liza to share more about herself. Thanks, everybody.
Cool, thanks, Lori. And so for me, a lot of people I know on the call, there's lots of WREN members here tonight. Of course, you will know that Lori and Sherry and Joan and I have all known each other for a few years now. We're very excited to be working together. We have done lots of work together, as Lori had mentioned. Lori and I did the Victoria Real Estate Expo 2 years running, which was the first of its kind in Victoria. We're still getting kudos for that a few years later. I founded WREN because I realized that there were so many women who were getting kind of left out of the whole investment picture, and we wanted to make sure that women were able to learn and participate. And we're really excited at the growth that we've been seeing with WREN. It's really getting larger across Canada. with COVID, we've been doing everything online. And so we're doing different kinds of meetings online almost every week. And I am just so excited that that even though we're not doing mobile home parks with Joan in the US right now, because things are crazy in the US, I'm so excited that Joan and Lori and Sherry and I have decided to partner up and go ahead and get something started over on the island. So we're just beyond excited. We've been buzzing with excitement. So it's really exciting to share that with you tonight. And I'm going to turn it over to Joan. Joan, are you there?
I am. Thank you, Liza. I'm coming to you guys tonight from beautiful Heffley Lake. So Zoom meetings can happen even while you're on vacation. That's the best thing about it. I am getting eaten alive by mosquitoes, so if you see me swiping my hands around, don't worry. It's just that I'm sitting in a bit of a buggy area. But I'm so pleased to be here tonight, and I just want to thank all of you for taking the time to be here tonight to hear about our project. As Liza and Lori said, we're very, very excited about this opportunity. I currently still work full-time for a living, and I work for the City of Vancouver, specifically the Park Board. And I currently oversee a portfolio of 75 different buildings that I am responsible for the maintenance and capital expenditures on. So it's been a really interesting learning experience for me to really understand how buildings work and how we keep them maintained and just everything to do with the capital expenditures around buildings. So this project has been really exciting for me to have the opportunity to look at a brand new building to build from the ground up with the knowledge and experience that I currently bring. Liza mentioned, I'm also the founder of TPG, which is the Trailer Park Girls. And for those of you on the call who know me, you know that for the last few years, we have been focused on investing in the United States, specifically in trailer parks, because they're a fantastic buy and hold asset. With COVID-19, that's really changed our plans significantly, because it's very difficult to invest in properties that you're unable to see or do any due diligence on. So I feel very, very fortunate to be involved with this group of ladies. We've pivoted, as is the 2020 word. We've pivoted our investment strategy, and we're now focused on developing on the island. And I couldn't be happier about being involved. As I said, I'm from the island, I'm an island girl, and it is absolutely my #1 goal to get back there and get closer to my family. So to be able to be involved in this project and many more hopefully on the horizon, focused on the island, it's just super exciting. And I'm really, really thankful to be sharing it with you guys tonight, and hope you can jump on board for the ride with us. And with that, I will toss it over to Sherry.
Okay, hi, thanks. So my background is basically financial planning and finance. That's where I started, and I became a real estate investor in 1997, kind of by accident. So didn't really know a lot about what I was doing at that point in time, but I began to take it very seriously about 2001. And we ended up buying a lot of properties. We probably did about 36 over a 4-year period. And, you know, being a landlord and learning all of that, but I was looking for something more. I wanted to own an apartment building after I met Ralph Case, who's Aussie Jurik's partner. That was my vision and my plan. And it took me about 4 years to get there, and meeting many, many people. And I met a wonderful woman who was a builder, actually, and she had moved out from the Airdrie, Calgary area into the Greater Victoria area. And I started working for her as a realtor, because yes, I sold my financial planning practice and became a realtor. And so I was focused on finding her land to build on. And she built the first rental building in Langford in over 30 years. And so I thought maybe she might want to sell one sometime. So I said to her, hey, you know, I want to own an apartment building. Can we have a chat about that sometime? And she said, sure. And she called me back within a few days and said, I know you might have been talking about, you know, buying one a few years from now or whatever, but I can build you one cheaper than you can buy one. Would you like to talk about that? And I said, yes. So to make a long story short, we started developing and doing purpose-built rentals in 2014. So you can go to the next slide, I think it is. I think, yes. So this is in Langford. So Roberts Place was our first building. which was, and actually, now that I look at this slide, this is reversed. Oh, no, it's not. Roberts Landing was our first building. It was 20 units. Roberts Place was our second building across the street, which was 30 units. Hockley Corners was our third project, which is now a completed 63 unit. It completed last August. And we're now doing a fourth project, which is 240 units. So the interesting thing is that all three of these sites and buildings that you see on the screen, we sold them last year in 2019. So I've been through the sale process of a building, which has been very, very interesting. We had a REIT buy them. And so that was a very interesting process. And I think there's one more slide. Yes. So this is just showing, this was at our second building, Roberts Place, just showing some of the demand that we've seen for rentals. This is a lineup to get in to see our show suite for rentals. And the demand, we have not seen this demand slow down all that much, even though our vacancy rate has titched up a little bit. We are still low in the vacancy rate at about 1.5. You know, so it's still very, very low no matter how you look at it. But so yeah, we're pretty excited, or I am, to be involved now with these women. I've known them all for about 4 years, just actually over 4 years. I keep thinking we're at January of 2020 because the year just flew. But it's been really interesting to watch them. They've been wanting to get involved in real estate, and I've been working with them to start to do projects. But I was really pleased when they came to me and asked me to be a part of this. And I said, yes, I would when I looked at it, because I thought the fundamentals were there, everything was good. And we've talked about letting WREN and other people we know do stuff like this. So it was a great opportunity, and I said yes. So I'll turn it back to Liza, who's going to talk about Esquimalt.
Thanks, Sherry. And yes, I think everybody's probably getting the idea that we're pretty excited about this project and excited about working together. You know, it's just a lot to be excited about. So even though it's COVID-19 and people are feeling like there's a little bit of chaos, I think when I sent the email out a few days ago, I said, you know, those of you who know me know that of course we're going to decide to build a rental in the middle of a pandemic. Why wouldn't we? So here we go. So why are we building a purpose-built rental in Esquimalt? Now, many of you on the call are on the mainland. And so, you know, you might be wondering why Esquimalt. Now, there are a lot of you on the mainland who have also moved over from Vancouver to the island. I had lived over on the island for a while and was living in the Esquimalt area in Vic West. And so it's all about the fundamentals. You're all real estate investors, or you're getting ready to be real estate investors. And so you know about the fundamentals. So we are looking at what is going on in Esquimalt that is attractive to us. So first of all, that first point, there's a strong demand due to the low vacancy rate. I'm going to show you a slide that talks a little bit about how low that vacancy rate. COVID-19 is likely going to result in more people renting. They may become lifetime renters. They might just be renting for a while, but there is some talk that a lot of people may not actually be able to afford the properties that they own, and so they could very well downsize or go back into renting for a little while. The interest rate environment for now and for the near future is pretty favorable. I think we're seeing interest rates as low as, oh my goodness, I've heard 1.4 and 1.6 and 1.99. So there's some pretty exciting rates out there. So when money is as cheap as it is, we'd be crazy not to take advantage of that, right? And in Esquimalt in particular, the official community plan is really, really positive about developing. So a couple years ago, we were starting to look at Esquimalt. It was before their most recent election. And they were still kind of thinking, do we want to have a lot of development, or, you know, do we need to go this route? And then when the election happened, it became clear that they were going to direct their official community plan for development. And so we're going to see that as we come up. And as many of you know, all levels of government across Canada are supporting rental buildings in particular, because we do have a rental crisis really in all of the major centers across Canada, and we definitely need more rentals. So we love Esquimalt. It fits all of these boxes. And we'll get into some more details as well. And of course, the last one, our group is committed to investing in our communities and creating livable spaces that align with the values and needs of those involved. So you've probably heard me talk a little bit about the 5 wins. We want our tenants to win. We want our investors to win. We want our businesses to win. We want our family and friends to feel good. And we want our community, we want to be providing something that's useful and an kind of an uplift for the community. So those are some of the reasons there. A little bit more background on the area. So the vacancy rate in the Greater Victoria area is about 1.6%. Now, a lot of these things that we're looking at are pre-COVID. Some people say things are going to be different, better, or worse. We're not all sure. Everybody's kind of taking a crapshoot right now, but there are some important things about Esquimalt that are pretty solid. So, of course, it is a growing population. They have one of the highest job ratios to residents. CFB Esquimalt is there. The shipyards. It's close to downtown. I mean, who wouldn't want to live in a waterfront community that's close to downtown Victoria? It only takes about 10 minutes to drive, and you can walk it, you can bus it, there's good transportation, and all kinds of things that make it a really positive place to invest and live. Little table here about the population growth scenarios. And so if you have a look here, the 2016 population, it's anticipated, it was about 17,000 people. This is from the Canada Census. Rate of growth over 5 years, we're expecting about a 10% growth rate over 5 years. Estimated population for next year is about 19,500. It's an increase of almost 2,000 people. And they need about 883, so let's call it 900 houses to satisfy the demand. So that's, you know, that's all the kind of stuff that we've been looking at and why we're looking at Esquimalt in particular. So it's looking pretty good. Sherry, anything to add on that one, or ladies, anything you wanted to add about Esquimalt there?
Well, I was just going to say Esquimalt, there's no real commute. Like you avoid what we call the Colwood crawl or having to get slowed down in a longer commute. It's really, really easy to get from Esquimalt to downtown if you work downtown, out to the West Shore, out to the airport. It's really quite easy either way.
Absolutely. Yeah, good point. Great commute, good schools, good population base, good jobs, all kinds of goodness. So here we go. So here's a little bit from the official community plan. So you'll see the little arrow pointing to where our little corner of happiness is, and you'll see it pointing to high density residential. So the official community plan is that this entire corner is slated for medium and high density residential. So I'm going to show you the next slide, which shows what else is going on in there. And so this is a Google map. And again, here is our little Constance corner that we're talking about. Now on a couple of the major intersections, there are some really great projects that are going in. And again, Esquimalt is pro-development, they're pro-rental. And so these are rental buildings that are going in. So here we have where the Royal Canadian Legion used to be. This is now under construction. So there's a giant hole where this area is right here. And this is a sketch. It's about an 11-story building. It's going to be a combination of seniors residences and apartments. And then over on the other side, you'll see what is called Shoal Heights. And this Shoaling Heights, Troy Grant is his team, Sierra Lane, is putting this together. And it's right across the street from our little project. And it is, it's quite a significant development. He's putting in some residential, some commercial. I think he's going to put a daycare on the ground floor. And this whole area, this little corner that we're looking at is really going to be happening, and there's lots going on there. So it's happening as we speak. Shoaling Heights, I think, has gone through their second reading. Lori and I were on a call recently, and we listened to them get all their boxes checked. And so that is moving along nicely. Sherry, anything that you wanted to add on that one?
The Red Barn Market.
Yes.
It's a big thing.
Yeah.
And we're really close to the base. You can see the Canex store there. Right at the end of Canex is an entrance to the base. And
Esquimalt Road, we're right off of Esquimalt Road. We're close to the water. We're about 10 blocks to the water. And so it really is a great location. So let's go to the next one here. And so I'm going to pass it back to Sherry in a minute. She's going to walk us through some of these slides. It looks like she's got a little coughing going on right now, so we'll give her a minute, but she's going to tell us about what we're building. Tell us, Sherry, what are we building?
What are we building? Yeah, so we are looking at putting on this lot a 20-unit apartment building right next door. Maybe you could just go back to that previous slide, Liza. You'll see, oh, no, back. Yeah, so you'll see that where the little blue dot is where we're looking at building. The building in front of it is a strata building, a small self-managed strata, and the building to the north of it, or where the little green is, that is an existing apartment building. Nobody's really interested in selling those. But so there's this little, and it's a purpose-built fourplex sitting on it right now that was built back in the 60s. But it's not a great use of that lot. So we've looked at it and we've gone, and CR Lane has been helping us with everything because they know the area so well. So we're looking at using them as our builder. But going forward now into the next slide. So that's what we're looking at putting on there. The address is 61 Constance Avenue, and we're going to be building it using a limited partnership. So go forward, Liza. So what is a limited partnership, you may ask? It composes, or it's comprised, I'll get the right word, comprised of two different sections. There's the limited partner, who is also what we call the investor. And in a limited partnership, the reason why the limited word is there is because there's no personal liability, there's no mortgage responsibility, there's no personal guarantees from the investor, and there's no operational responsibilities. So it's very, very passive, extremely passive from that point of view. And then the second component is the general partner. And that's where Liza, Lori, Joan, and I come in, because the four of us are the general partner. So that means that we take on the liability of the project, we take on the mortgage, we take and have to sign personal guarantees for this, and we are involved in the daily operations and responsibilities of the project as it goes forward. So that's, in a nutshell, the two, oh wait, you have to go back, sorry, I'm not ready. The two components of a limited partnership. But the other thing to remember about a limited partnership is that it is registered. So it is a registered limited partnership with the Securities Commission of BC. So we do, in this case, require that you be a resident of BC in order to invest. What that means is that we are registered, which means that we have accountability that we have to do as a general partner to our investors. In my past projects, we have always used a limited partnership structure. It's something that we have always done. We found it's worked well because my philosophy, which is the same as Liza, Lori, and Joan, is that we need to put the investor first. And so that means that we are not taking any fees whatsoever out of this, no management fees. As we run things, no fees for raising money, any of that, nothing is being paid. The investors are going to get all of their money back, their profit, before we take a dime after expenses. So we are not taking the money from that point of view, which is really important because the investors need to have protection for their money. And the fact that you don't have a personal liability is the protection. Having said that, because it is Securities Commission, and if you do decide to invest, you're going to sign a piece of paper that says, warning, warning, you could lose all of your money. So you can lose your principal, but you cannot lose beyond that. Where the four of us who are general partners, they can come after everything we own. So it's really important, but you know, there are no guarantees in an investment like this, and you know, you could lose money, you could lose your principal, but you cannot lose beyond your principal. Next slide. That was the bad news. Anyway, so what is the opportunity? We have the 20-suite purpose-built rental building. The estimated cost to build is $6 to $7 million. And why are we saying estimated? We were hoping that we would have a firm number today, but that didn't happen. We have to go back and tweak. But we do know it's not going to be more than 7, and we do know it's not going to be less than 6. So hopefully we will come in the middle, somewhere around 6.5 or 6.6. But so that's why we're saying estimated, and we can't give you a definitive number, but that should take shape over the next week or two. The estimated completion value of this building will be, again, it's a range 8.5 to 9 million. This will be determined by the revenue that the building generates, the cap rate, etc. So we are expecting on this, it's going to be 20 units, 10 2-bedroom, 10 1-bedroom, and 1-bedroom, 1-bath. 2-bedroom will have 2-bath. So this is what we're looking at as far as what the value will be. The ownership we're offering is a 40-60 split on the limited partnership between investors and general partners. So the investors will be getting the 40%, the general partners will be getting the 60%. Our ideal exit strategy is to sell upon completion. And so I would like to just say that this has been our experience. I have done buildings where we've held them for 3 or 4 years and then sold. And I've done buildings where we have opened a building in August and the sale went through in December. So it is actually much more lucrative to sell quickly as opposed to hang on, which may sound a little odd, but it is just the way it is. And so our intent will be to sell. Knowing that, however, the market can be fickle, and maybe when we're done this building, it won't be the right time to sell. So we have to be prepared to hold on to it if necessary. So once the project is finished and we have it leased up, there will be income coming in, which again, we will split with our investors. And we will likely do that every 6 months because the amounts will not be huge in that first year in particular. But we will income split after expenses on net after rent is collected. So that's how that's going to work. Next slide, please. The minimum investment that we are structured for is $50,000. We do this in 2 closes. One is August 17th, which is just a week away, and the second close will be August 31st. The anticipated hold time is 3 to 5 years. Obviously, we want it to be closer to 3 than 5, but again, if the market turns, we need to know that we can hang on because we want the best return for our investors, for sure. The projected return we're looking at achieving will be 13 to 18% per annum before tax. So don't forget, the income you're going to earn will be taxable. So the first and second close we're looking to do is because we need to buy the land, and so that's what it's predominantly for. Next slide. The intent is to build and sell on completion. Oh, wait, you've gone way too far. I think actually
Back one.
yeah. So I was going, hey, we skipped one. So we're looking to raise 1.5 million to close on the land by September 2nd. And then we'll likely be raising between 300 and 500,000 extra for the construction cost. We don't know exactly when that's going to be, and we're not going to need that money right away. But just so that you know, that's really what we're going to be looking for, is close to $2 million. There will be no income or revenue paid out during the project. The payout only occurs at the end or once we're fully leased up and earning income on a regular basis. Next slide. Yeah, so the intent is to build and sell on completion, lease up, share the rental income, pay out every 6 months until the sale of the building, and hold only until necessary. Our plan is to be talking about selling the building prior to closing, which is what I've had a fair amount of experience in doing now, and having it ready so that when we lease up the building and have it fully tenanted, we got somebody waiting in the wings to take it over. Next slide. So this is our timeline. The summer of 2021 is when rezoning will be done, because we do need to rezone this project and this property, but this is what it currently looks like. And we need to demolish that building next summer. and then it's 9 to 12 months to do a build. We're looking at doing 20 units on 5 stories, where the picture that you're seeing is 4, and it'll have 1 level of underground parking. So how many units you can put on a site is always dependent on the number of parking spots you can get, and it makes no financial sense, even though the city would allow us to put higher than 5 stories. The parking costs don't make it really viable. So this is, the 20 units is what we feel is the best use for this property. In the meantime, you might be thinking, what are we doing with this little 4-plex? It needs a good cleaning up, and a few things like caulking the tubs and a little bit of touch-up paint and some landscaping. But we will be renting those units out until we are ready to demolish. And so we will have some income coming in to help with the costs of rezoning and everything else that comes up, but at least we can get some income off it in the meantime. And what happens if we can't raise the 1.5 million by the end of August? We do have a plan B in place, which shows you that we're extremely serious about doing this. We have the ability to do financing for a loan to value of 54%. We've already secured that. So if we don't, but we know that it's quite possible that there's more money coming in, then we can make the decision to go ahead or not. So that's really important to understand. We do have a plan B. So by the spring of 2022, our building will be done, and hopefully will be leased up by May, I would assume. And then what we're going to do from there will be hopefully, have either a buyer or a potential buyer that will be looking for it. And, so by the end of 2022, we could be out, but we also, because there's no guarantee in real estate, be looking at having to hold it longer. But the main thing is that we have run the numbers and know that we would be able to cash flow. Not huge cash flow, but we would be able to cash flow if we have to take out the construction mortgage with a normal conventional mortgage, that it would work for us. So that in a nutshell is sort of about how the process is going to work. And I want to sort of, leave it for a lot of questions, because I'm sure that there's tons of questions. So we can open that up. Of course, we have proper documentation. We have a limited partnership agreement. We have a subscription agreement that's required. And I should say that we're opening this up. We don't have an offering memorandum. We are using friends, family, business associates, and accredited investors only. So you have to fit into that criteria. So if you've been invited to this and you're here tonight, you know that you likely fit into one of those categories. And so that's what we're using, but we do have the proper paperwork in place, and would be happy, because you need to be able to read through the limited partnership agreement and the subscription agreement to make sure that you know who, what, and when. And so if you are interested in getting more information, please contact whoever it was that invited you here today, and we'll make sure that we deal with you on that basis to make sure that you get the proper information and questions answered. But I'd like to open it up definitely for questions. So if you have questions, I'm happy to hear voices. You can unmute yourself, or Liza can unmute you, so we can have a discussion, which is what I prefer in regards to doing this kind of thing, is let's open up a discussion and talk about it.
So if anybody has questions, you may know how to raise your hand, or if you've got your video on, you can just wave, or it doesn't look like we're being bombarded right out of the gate.
Dana,
so you could,
Dana.
There you go.
Dana and Jeanette. So who wants to go first?
Dana, you need to unmute yourself. All right.
Okay, now I can hear you, I think.
Go ahead, Dana.
Okay, so I think this is very cool. I think it's very cool. So I just want to say that up front. And so my question is this: what is the hardest part in your experience of doing real estate, what's the hardest part? Is it like the sales exit part? I mean, I know real estate is different every time, but what's the hardest part of real estate for you? And what's the best?
Okay, well, I think all of us will probably have a different answer, so I'll go first. The hardest part for me when I started doing this actually is raising the funds, right? It's asking people for money.
Right.
That I thought it would be relatively easy when I did our first one. And I thought, wow, you know, it should be easy. I know all these people, they got money, you know, but the question is, you know, do we know you enough to trust you with our money is another story, right? Because there has to be a certain element of trust, or that you believe in someone's track record or what they've been doing. And you know, that sort of thing. So that was what I found was the hardest, was to actually ask people for their money. And then the part that comes along with that, which I take very, very seriously, is now I'm responsible for that money.
Mm-hmm.
And, you know, that's a good thing to have because it guides your decisions and everything else. So out of everything, you know, selling it, buying the land, finding the deal, putting all of that together, finding the builder, doing all that in comparison to raising the money is easy.
Interesting. Thank you. My thought is that with your experience, and Victoria's a small town, I mean, the island's a small place, that would, especially experience, that would open those doors.
Yeah.
Experience.
But, you know, you have to start somewhere, right?
Exactly. Yeah.
And so our first one, it gets easier every time you do one. You know, like a lot of people who invest in our first investment or have invested in our fourth, you know, like they keep investing, right? But it's to get that first one. And I think like that's part of the thing, like Liza, Lori, and Joan have a lot of combined experience, but in the development arena, they don't have a lot of street cred in some regards. They have cred and talent in so many other areas that they're bringing to this project. But this is going to get them over that hoop. And I've looked at it as it's an opportunity for us to prove, especially to the WREN members, this isn't rocket science, and you don't have to have it all together before you can actually make it happen.
All right, great, good. That's good.
Great question, Dana.
Thanks.
Yeah. I'm just wondering, Lori, Joan, do you want to answer the question from your perspective, what you think is the hardest part? I know for me, I can answer it really quickly. It's finding the right partners, right? It's finding people who want to do this with you. And I mean, look at who I'm with, right? There are a few people who know the first little project that I did and how challenging that was, but I learned all of the lessons I ever needed to learn from that one project. That's me. Lori, anything from you?
Sure. Yeah, I think for myself, I mean, like Sherry said too, always, you know, raising money is always, you know, a big step, but also making sure that everything lines up. So you have, you know, the fundamentals behind the project are there and strong. The partners that you are working with, of course, the builder, you know, making sure that you have the right team in place. I think just making sure that all lines up, which can be challenging. So that's what I would have to say.
Good.
Joan?
I would just follow up to what Sherry said about the raising the money. Myself, everybody I've invited to this call tonight, I take every one of your pennies as my own, and I take a lot of responsibility for that. So the raising the money and you know, feeling so very confident and sure about this project is probably the hardest part. And I do feel very confident and sure about it. And so anybody I've invited, I take that responsibility, and you know, that's a big hurdle to come over for somebody who, as Sherry said, we're new and we need to earn our street cred. But you know, I'm very confident with the team of ladies we've got together, and especially with Sherry's experience and credibility in Victoria. We've really got we've got all the components.
Perfect. Excellent.
Awesome, thank you. And I know Jeanette had her hand up, and so did Susan and Gultaj. So Jeanette, you go ahead first and we'll work our way around.
Oh, thanks, Liza. I just might be the wet blanket. I'm very excited with what you're doing, you gals, just to say, so that's great. I'm just wondering, I mean, typically in Victoria, I live in Victoria. Typically, I think people have generally been able to realize kind of an 8 to 10% increase year over year on their investment in real estate. Sort of like no holds barred, that's kind of guaranteed. You buy a house, the next year you can sell it for 10% more. Pretty much that's how it's been for a number of years here. So you guys are offering, and this is not, this is just like a question. So you're saying ROI is going to be 13 to 18% per year.
Mm-hmm.
Even though we're heading into these risky times where in Victoria, we have an insulator as well. This is just to encourage your potential investors. We have the insulator, the double insulator of a CFB Esquimalt plus provincial government, sort of being the backbone of our local economy. But so this 13 to 18%, I have two questions really. The first one is, if that's a year over year figure, is it compounded, or should investors expect and somewhere between 13 and 18% at completion and sale of project? That's question one, because that would be okay. And right, before tax, so before even your tax. And the second question was, if we had to say a burnout in the economy, sort of this delayed macro reaction to COVID, where 3 years from now there's a general slowdown that we even feel on the island in the economy, and we're completed and you're leasing, and some of your investors can't afford to keep the money in the project. Do you have a buyout option plan?
Yes, would be the short answer.
There.
That's the short answer.
Perfect.
Yeah.
So those are the two questions: ROI,
okay,
compounded, or flat rate after 3 to 5 years.
It would be basically a flat rate, because what's going to happen is your rate of return is going to be at the end when you get it. So whether that's at 3 years or 5 years, it's this rate of return, because you're not getting income on a regular basis, and there's no guarantee of what your return is.
Yeah.
So let's say, you know, that you end up getting all of your money back plus maybe 50%. You would divide that 50% by, let's say it was held for 5 years. That gives you your, you know, 10% per year. So that's how we look at that rate. But a lot of people like to know sort of what are we looking at. And so it's going to depend on how it gets paid out and when it gets paid out. It's not really how, because most of it will be that way. It's just if we're going to have time where it's going to be leased up as well, which isn't a huge amount of income, but it'll be a little bit, and we'll have a lot more detail on that in the rest of this week, basically.
Flat or compounding? Sorry to interrupt.
No.
Flat or compound?
It's
compounding helps a lot for people who are thinking, who are actually, you know, wondering. So, okay.
No, it's a good point. So I'm not talking about a compounded rate of return. No. Your second question was in regards to what happens if people can't hold on. So during the time of the project build, there is no exit for an investor unless you found, like, I don't know, somebody who would take over the units that you own in the limited partnership, and that would have to be approved by us, right? So that's the only exit that you have while the project is being built. In the limited partnership agreement, we have built into it that in the first year after owning, if you are stuck, we are allowing 25% of people to redeem if we don't have a buyer at that time, but they will be redeeming at a discount. And in that first year, that discount is 20% of your value. In the second year, we're doing another 25%, and the discount at that is 10%. And in the third year, there's no discount. So we really anticipate after, you know, the project is built. So that would take us out quite a ways. The idea and experience has been that we definitely would be done by that time, but we always have to make provisions because there is no guarantee. I'd just like to speak briefly to your comment about the downturn. We have looked at that extensively, and I mean, I'm heavily invested in real estate and in the Greater Victoria area. Other than one property left in Alberta, this is my focus. When you are building rentals with the demand that we have, there was such a demand before COVID, and now we've had COVID, and I don't see the demand for rentals diminishing because people still want to move here. I don't know if any of you have been paying attention to just the real estate sales in the last little while since COVID. It's been going a little bit crazy, and the main number one reason for that is because people are buying up. They aren't buying down, they're buying up. And they're buying up because they're worried if there is another lockdown, they need more space or their family will not survive. Number one, that's the number one reason we hear. And I'm not talking about just me, I'm talking about the Greater Victoria Board, Real Estate Board. They need space. But then the number two thing is that everybody is moving here because guess what? They've discovered that they can work remotely. I've got tech people moving here from Ottawa, and they've started a little bit of a accidental, exit from Ottawa in the tech field because people want to live here. If they're going to be locked down, boy, they want to be here. They don't want to be in Ottawa. So there's a lot of movement because people have discovered they can work from home. And if you're going to work from home and be in Canada, where do you want to be? That's not even taking into account what's happening in the seniors market, because people who have been interviewed about where do you want to retire, 15% have said they want to be in Victoria, not Vancouver Island, Victoria. And if you look at the baby boomers and what those numbers mean, like right now, Greater Victoria is about maybe 380,000 people, right? We could be looking at doubling our population, or the amount of people wanting to move here could be double our population just based on baby boomers. Where the heck are we going to put those people? And you may think I'm crazy, but just talk to anybody who deals in seniors housing, senior advocates, anything like that. Like there's a silver tsunami happening. And, I'm part of the baby boomers, and we've been talking about this for 10 years. And it is happening. And so there's this huge demand. So whether the market, because of COVID, slows down, we don't really see the Victoria market crashing. Like we have stability, like Jeanette said. We have the government workers. We have the military. We have people who move here who have their assets already accumulated. So yes, a stock market crash can hinder that. We saw that in 2008 because it erodes their retirement funds. But for the most part, we are stable. We don't get hit like Vancouver and Toronto, which has much more of this kind of thing. We're just a nice little rolling market. And so yeah, I'm pretty bullish on our market here overall. Sorry I've taken up so much time, and let's get on to the next question.
That's okay. So Allison's got a fairly easy question in the chat. So yeah. Allison says, is there enough time to cross-check with your lawyer for the limited partnership and subscription agreement with the COVID situation? For
Definitely.
Yeah. And also the two dates mentioned, the commitments, does that mean there's a split of 25,000 each, or is 50,000 due all at once on August 17th?
Yeah, it's whenever close, whether you're going to do the 17th or the 31st, it would be 50,000 because our minimum subscription is 50. So anytime we take money in, it has to be 50,000 minimum. There above, it can be like 5,000 increments above 50,000. It doesn't have to be in increments of 50,000, but that initial payment has to be 50, not 25.
Okay, and Susan, you've had your hand up for a while. Do you want to go ahead with your question? You just need to unmute.
Oh, never mind. There we go.
You got it. Go ahead.
First of all, let me just go, wow, this is amazing. And in particular, I'm curious about the builder, the building aspect of the project. If I was following Sherry's part of the presentation, the builder that you've selected is somebody different from whom she has
Yes.
closely worked with. And so I just wanted to understand a bit more about how you went about selecting the current builder and what that builder's track record is and how the project from a money perspective is going to be managed.
Yep. Okay. So, yeah, so we've looked at different builders. The builder that I have used in Langford does not build outside of Langford. So that wasn't even a question. And I've been looking at wanting to build in Esquimalt for probably 4 years or more. I think since I've met Liza, I've always talked about Esquimalt's the next big place because it's the least expensive in all of the core. But I couldn't do it because I didn't have a builder. I didn't find a builder. So I've had my eyes open for builders in Esquimalt for a very long time. Sierra Lane, so if you Google and look up Sierra Lane as a company, they are based out of Alberta. That is the builder, and they have like all of their past projects and all sorts of stuff. Troy Grant is the main person that we've been dealing with there. They also operate another company that does the larger projects like Corvette Landing and various things here in BC. So I think Liza had the first contact with Troy, and we've kind of done a little bit of a dance to check on things and where things are at and see the samples of his budgets and how they align with what I know. And we've come to feel that we have the same values, and I do not mean this in any negative way or positive way or anything. It's just my opinion, but he is definitely a prairie person. And if you're from the prairies, you may know what I mean, but and the builder I have in Langford is also from Alberta, a prairie person, born and bred. And it's just their way of doing business and their way of keeping things very simple. And they're willing to go to work for you without you having to sign a document or to pay them yet. They take a lot more chances. There are a lot more chances on people, not chances of in the sense of risk of losing your money. They just trust, they're a little bit more trusting in what people say as opposed to having everything documented. So they started working for us before we ever had any agreement in place because they believed in what we were doing. We felt that we had a lot of similar values with his team. Having said that, we haven't rushed in and signed a builder's contract with them yet. But what we did do is we have signed the thing for them to take us through the rezoning process. And it was sort of incumbent on, let's see how you do here. And if this goes really well in the way I think, then, you know, we'll be happy to do a builder's contract with you. If the numbers work. So that's where we're at with that. That's how we've got to that position. If for whatever reason that did not work out well, we do have plan B, plan C. I am a financial planner and that's what I do, I plan. So I always have plan Bs and Cs. So yeah, to check out that. Now, also want to explain Sierra Lane is a design build company. So which is what I love. And so what it is that they take it from design, they'll take it through rezoning, they'll have it designed by their draftsman, and then it goes through an architect for the final stamp. So they handle the project from A to B. But as far as, you know, you're looking at, well, what happens with the money management, day-to-day money management is ours, the GPs, to keep our eyes on. How it's going to work is that the money that we're raising is the money required in order to get a construction loan. The construction loan is, you know, done on a draw basis, and you have a quantitative surveyor that, you know, says how much can the draw be after they've been on site and examined everything, and then the bank goes, yeah, we'll give you a draw on your construction mortgage. So the quantitative surveyor and where we are on budget meetings will be between us and Sierra Lane on a regular basis. And by the time we get to first draw, our draws will likely be every month thereafter until we're finished. So that there's money that comes in that pays their laborers and theirs. But they're the ones who do all the tendering. They're the ones who do all those like final day-to-day things with their site soups and stuff like that. And we oversee them. And that is a system that I have worked with before, and it works well. I'm not a builder, and there's a lot of things about building that I don't know. If you asked me, you know, anything about the building code, I likely would not be able to answer that question. But where I am used to doing is I am more project management, handling the money, protecting the investors, making sure that stuff gets done in a timely manner. And then if we hit an obstacle, it's not about panicking. It's about, oh, here we are. Now where do we go? Is there a plan B? Is there a better strategy? And making sure that you've got a team that you can work with. That goal is to make this thing work. Nobody gets paid till the end, right?
Just to quickly add to Troy, I met him a year ago, went to a couple of council meetings with him. He's all about building relationships. He is thorough, he's honest, he is just really caring. He loves teaching, so he loves the fact that we're coming at this and we're learning as we're going on some of these things. He's been developing a great relationship with the councillors and the mayor in Esquimalt. He's got a great relationship with Mayor Desjardins, and just generally, because he's doing work in Esquimalt and right across the street from our project, it feels like it's definitely a good place for us to start with him, and we'll see where we get to as we grow. He's also doing some things on Salt Spring Island. He is really into sustainability. I think he has a hemp farm, so really kind of lots of interest, really holistic, and really passionate about helping people succeed. And I know we are at 8 o'clock. We're going to keep going, and we're recording. So if anybody needs to pop off, we're not going to be offended. We will make sure that you've got answers to your questions. We're going to continue. I know that Joan, you had something to say, and then Goltaj had her hand up, and we have a question from Arlene, which is a pretty easy one to answer. So Joan, do you want to go ahead?
You already answered it, Liza.
Oh,
it was
perfect.
Just to say that they're doing the project across the street. So the synergy of being 30 feet away from a giant project for our small project is the synergy is it's just right.
Yeah. And that's shovels in the ground about 2 months from now, I think.
Yeah. So just to clarify too, if you look on Shoaling Heights, for example, they're not the developer, they're the hired builder. Like that's what they do. Their job is to get it through rezoning and to build it. So it's important because sometimes when you go and you look on websites and you're like, where are they? They're buried in there because they're just the hired builder, right? That's what they do.
Okay.
Yeah, so just really quickly before we get to the next question, I was gonna just answer this one because it's really quick, which was, what was your track record, ROI, for previous buildings? Yeah, so the first building, we didn't give them any equity. It was a limited partnership where we had the right to buy back their units by a certain date at a straight flat rate of return, which is 10% per annum. From the day they gave us the money to the day they paid it back. So that was the rate of return. In the second building, we did exactly the same thing. In the third, so their rate of return was basically 10% per annum compounded. On the third building is when we gave equity, and their rate of return over a not quite 3, it was basically 2.5 years, was 56%. Not per annum, total. Over 2.5 years was 56. On our next project, we're still working through the numbers on the 241. What we have in that one is we do have an option to buy back at 12% per annum, but with a equity stake as well. So we're just working out the final numbers.
And Gultaj, you had a question waiting. Nice to see you. How are you?
I'm good. Nice to see you too. I have Russ here with me.
Hi, Russ.
Hi.
Last time we got together, you remember we talked about doing the loan from the CMHC?
Yes,
There?
with Jorian, correct.
Yes. Now, is that something that you were thinking about with this Esquimalt building? Because it doesn't look like what he had talked about, having the commercial underneath,
It's
etc.
actually what inspired this whole thing, was talking to Jorian, those conversations about using that CMHC money. This project may end up being a little bit small because with the COVID, and actually Jorian says he's got some updates for me tomorrow, so I'll have some news tomorrow. With COVID, the CMHC still has a ton of money in their rental construction financing fund. It's still about $10 billion. But they have had so many applications because all of a sudden developers across Canada are seeing that they need to build rentals, and so there's a lot more applications. They used to get about 2 a month. Right now they're getting about 200 a month. So it's really increased. So they are choosing the projects a little bit more, not cautiously, but they are really going hot on things like the larger projects, more sustainability, higher building codes. So the building costs would be quite a bit more. And so when we were talking about applying for the CMHC, and we will likely still do an application, we just don't need to do it right at this point. The cost of the traditional financing could offset the cost of what we need to do to meet the criteria for the CMHC. So we'll be weighing all of those factors in when we get to that point. Sherry has also done financing through BC Housing Hub financing, and that's another way to get access to financing. So we'll definitely be looking at all kinds of opportunities. But you're exactly right, Gultaj. That was what started this whole conversation.
That's right.
That's right. That's why I thought of this. So, well, that's good to know that you're looking at all the options, and I imagine financing for this is still pretty low interest. So
It is.
My next question is, how can I lose all my money? How would I lose all my money? Tell me what.
Yeah, what would have to happen?
Yeah.
What would have to happen is, yes, what would have to happen is, well, it used to be kind of easy to just say, oh, all of a sudden interest rates took a hike. And when we were done the project, interest rates were sitting at 18%. And so there's no way that you can get cash flow. You run into a bankrupt scenario. Who's going to come and pick it off? And, you know, then the money is split up. And again, in the limited partnership agreement, in the event that anything does happen like that, the expenses are paid, like, you know, the builder, the tradespeople all have to be paid. And then the money, the principal goes back to the investors. And then if there's any principal that the general partner, which is the four of us, has put in, would have to come back. And then the profit is, if there's anything left over, it goes to the investors before it ever comes to us. So it would have to be pretty dire for you to lose all your money. I could see it more potentially that you might lose part of it, or maybe the rate of return isn't there. The market changes enough that, you know, you can get your principal back maybe, but the growth is missing. You know, those are all scenarios that are there. You know, do I feel what is the risk of that? You're the only person who can judge your own risk tolerance. I certainly can't. I mean, even between Rick and I, like, my risk tolerance is much higher than his. And yet I know that I'm quite conservative to a lot of other people. So it all depends on individuals. And everybody thinks their risk tolerance is higher than it actually is. You only really know what your risk tolerance is when your money's going in the tank, right? So think about the last time you were in the stock market. Were you invested in the stock market in 2008? What was your risk tolerance in October of 2008? That's probably a truer picture than what you're feeling now about what your risk tolerance is. So, or, you know, where were you on Black Monday? Maybe some of you weren't even around yet. But anyway, everybody's so young. You know, on Black Monday, October 19th, 1987, you know, that's a true picture of what your risk tolerance is when you see that, oh, all of a sudden your money just got chopped in half.
Mm-hmm. I think, you know, I guess my question is, you're using the money to buy land and then you're building on it. I mean, I just don't see land values going down significantly. I guess if something terrible happened with the building, then I don't know, there'd be a liability issue. So I was just trying to kind of think of scenarios of what could really go wrong. And I don't know well enough to know.
Well, and the reality is that, you know, because we're registered with the Securities Commission, you know, we have to tell people you can lose all your money. We have to keep repeating there's no guarantees on anything, regardless of how confident we may feel. That is a requirement. And that's why if you did want to take it and run it by a lawyer, we have no objection to that, because you have to, you know, make the decision for your money, right?
Mm-hmm. And my last question is this rental units, are they going to be like super high end or just like average? I'm just curious.
Yeah, we've gone for midline simply because Shallowing Heights is kind of higher end, and we're a small kind of boutique. And if we went too high end, the numbers wouldn't look near as good from a cash flow point of view, or we could be negative. So we have to look at it from a budget point of view. Also, we're a smaller building, and in doing so, we also look at who's likely our end users, and in most cases, it's likely going to be military.
Mm-hmm. Yeah. Okay.
Yeah. So we want it durable. We want it to look nice, no question, but we want it to be durable, not just, ooh, this looks really nice, and this is what I would live in. No, it's knowing who you're marketing it to, who's going to likely live there, and what's important to them.
I hope it'll be pet friendly.
Yes, it should be, but small pets and no exotic pets.
Right.
Although we're still having that discussion, but
I agree. Small pets and no exotic pets.
you know, like we don't necessarily want a Saint Bernard. One of the builders I know who built buildings out in Langford, they had no restrictions on their pet size, right? And I looked at it, and then I looked at some of these big animals can do a lot of damage. And so it's like, you know, who's paying for those maintenance costs? But I have no issue with, you know, indoor cats or, you know, dogs that are, you know, 40 or 25 pounds or whatever. I mean, those are all details that we can work out, but yeah, we want to be pet friendly, but not smoking friendly.
Because I just got this little guy, and
he's so cute.
And he's little.
Very cute. So there's a question here that I want to address, which is, as limited partners, U4, just a quick correction on that. We are not limited partners. We are the general partner. Are you personally investing any money in the project? We have put in the seed money to get this thing started and get who's paying the legal fees to get everything structured for us. So we are indeed putting in some money, but we aren't putting in a lot of money. And the reason for that is because we're taking all the liability. We basically, I kind of describe it as we are putting all in. Like if there is a problem and there's tradespeople that aren't being paid, or somehow the builder has screwed us or whatever may happen, we're the ones that they come after. We're the ones who they can take our houses, or they can come after us for everything. We are taking on the risk. We could lose everything as opposed to just what money we put in.
Any other questions? Looks like we're winding down on the chat, and I'll just go through and see if anybody else has got their hands up.
Yeah, and we do a lot of the management, so we're going to be finding the investors. We also, you know, will be doing regular reporting to our investors. We tend to send out everything on a monthly basis with pictures. This is what's been happening. If investors want hard hat tours, they just have to let us know, and we'll arrange that for you and be there and walk you through that, answer questions. And then we deal in the day-to-day. We're the ones sitting down having to make those decisions. If there's a change or there's a lack of material of some sort, or all of a sudden the tariffs have gone off the charts and we have to deal with how are we going to deal with that. So it's important.
Okay. Any last questions? Any comments from anyone? Got a comment here. If not finding enough investors, how would you proceed with the project? If not enough, due a short amount of time before August 31st.
We have secured financing for 54% of the purchase price. If we don't raise the whole amount by August 31st.
Yeah, and just to add to that, we actually had about 3 lenders who came forward pretty much right out of the gate, because they're looking at Esquimalt and saying, oh yeah, we were interested in lending on these projects. So I think that happened before we even showed them anything to do with the building.
Yeah.
It was pretty much within 48 hours of us deciding that we were going to go forward. Our mortgage broker said, I've got lenders for you. So it's cool to be in that kind of situation.
Exactly. Any issues with strata insurance? Not really. We're not a strata, we're a whole building, and it is insured a bit differently. I don't like having individual hot water tanks in units. I prefer a hot water on demand system for the whole building. So various things like that, we really look to cut down on what the insurance is. I have a great commercial broker. Of course, we have to have it insured during construction and then after construction. So yes, it's not cheap, but it's built into the pro forma, and we tend to run our buildings at about a 24% expense ratio. Which includes the management and everything. We hire managers, property managers, to deal with the tenants and get them, leasing up the building before it's done. Usually you want at least 50 or 60% of the building ready to be occupied when you get occupancy permit.
Okay.
In what way will we be receiving ROI as a percentage of rental? So basically what happens is you're in a limited partnership, so all income flows through the partnership. So yes, if it is rented up and leased every 6 months, we're going to take, here's the gross income, here's the expenses, this is what's left, and it gets split and divided up. And a check is written and sent out to you.
Okay, I think.
Okay.
See, any last questions? Going once? Need to put my auctioneer hat on.
Or twice. I'm gonna have to run. I gotta go get an award.
Oh yeah, that's right. Yes, so Sherry's winning another award for tonight. All right, so we'll wrap it up. I know a number of you have expressed interest in getting information, so we're just making a couple of minor adjustments, getting all the certificates and everything signed. So we will start sending things out tomorrow. So whoever invited you here, I'm sure you have their contact information. Please make sure you reach out to those people, and we will start to get things going. Oh, good question, Patricia. Is there an upper limit on the return?
No, there isn't.
No maximum. We haven't set.
There is no on the return. There can't be a maximum. You're going to get whatever it is. It's 40% of the project goes to the limited and partners. So whatever that is what they get.
Equity fun.
Yes.
Thanks, Liza, Sherry, Lori, and Joan. Well done. Thank you, everybody. Lots of great comments. All right, so we'll say goodnight for now, and I know that we'll be in touch.
Okay.
Thanks, everyone. Thank you so much. Have a great night. Talk to you soon.
Bye.
Bye.